Welcome to another edition of the Pacific Northwest Farmers Co-op Market Update. Joining me today is Shane Rebold, Mac Reynolds. Trudy's on vacation today, so it's up to the Three Stooges to get all this data in front of you guys. Start with a disclaimer. The views and opinions of the program are of the host and are for informational purposes only. There's substantial risk to trading futures and options, which you should carefully consider prior to trading. So with that, the basis of today's podcast is going to be all of the data we saw yesterday from Stats Canada and USDA. We had a quarterly stocks report and planted acreage. And today we are going to start with canola and our resident canola prophet, Shane Rebold. What did we see yesterday? What does it mean for us?
Yesterday we saw Stats Canada came out with a 23.4 million acres planted number, which is a record. Previous record was from 2017 at 23.014. So definite big numbers out of Canada. Somewhat expected with the price, what it's done here previously. You know, the November contract, it hit $800. That's Canadian dollars per metric ton, which kind of is a record for that deal. So definitely everybody's trying to put it in every acre they can up there. What does that mean? You know, it's 8.9% up from last year. You know, the market definitely had a hard time digesting that. We were down 10. We didn't break through the low from previous on June 19th.
How far off the top are we right now from that $800 mark?
We are trading at, I think, 735 range.
Okay.
It's low 730s. Low was 727.
Got it.
So, and we are a couple bucks off of that, or spiked down, then came up, closed up a little higher. So not quite, but definitely a big fat chunk. So
yeah, and of course today the market's closed. It is Canada Day.
Yep.
We don't get to see the follow through.
Yep.
But, more selling to come tomorrow. You think?
I think so, but not as bad. You know, it gave me a lot of hope since we didn't even test that low. Yeah. You know, I'm kind of a due to technical trade, it didn't hit that number where it should have.
Yeah.
And if it was going to blow the lid off and this is going to be hard to digest, we would have punched through that number and gone lower. So,
well, and fundamentally speaking, what I saw last week was a report from Saskatchewan that said, 3% of the intended acres didn't get planted because of wet conditions, and that another 3% that they did plant was flooded out.
Yeah.
So are we going to see changes to this balance sheet in the future? Probably. The crop's not made.
No.
Like half of it's behind normal development and
Absolutely.
half of it's normal.
Yeah.
So
So
long ways to go.
Absolutely. So a couple things, taking that 6%, like we talked or we put out there, 3 and 3, 6% of 23.4 million is of 1.4 million acres. That's a big chunk. Definitely brings us back in range of what's already been done in the past. We've seen numbers, from 2016 at 2 million all the way up. This was a record at 23. The lowest that Stats Canada has is right in that 22 million or 20 million.
Okay.
So, a 22 number is not that hard to digest. That's what the economy is built for, crush plants are built for. Okay. And on that, all these surveys that they used for this number were taken from mid-May through the end of June.
All right.
Well, they were still hammering it in. So
still had stuff to get done.
And maybe it didn't get done. Exactly. Yep.
Okay.
Yep.
How about the United States? What does canola look like for the U.S. planted acreage?
Definitely increased, especially locally here and in North Dakota.
Okay.
I don't think too much to move the needle since Saskatchewan and Canada
dominate. They're like 10 times the acres we are.
They are.
Yeah.
But definitely increased acreage here in the U.S. Okay. I don't think it's going to be too much because we do have crush plants to consume that production here locally. If anything, North Dakota brings down some canola from Canada.
Oh, definitely.
That might not happen. Yeah. Canada's brought in some more crush plants. They'll consume that. A lot of the traders were talking about what are the ending stocks going to be here on the next report. And they were even claiming 1.5 to 2 million metric tons carryover could be a tight number. Where perceived that was a little excess. Well, with the capacity and China coming back in, exports are definitely picking back up.
Yeah.
So when we start comparing everything to last year's numbers, well, we got to remember China wasn't even in the game.
Right.
So that number was more shrunken than it should have been. Okay. So
there was another outside influence here this spring, and that was Iran, Strait of Hormuz. Any of that still affecting canola markets?
Not as much, which is interesting. We've kind of diverged from the oils on this. Maybe it took out a few cents.
Yeah.
Just because oil kind of is a base number just with soybeans.
Crude oil's back to $68 a barrel. That's where we were at the end of February before the whole thing started.
Absolutely. So, yes and no.
Okay.
I think if it keeps falling, we have to kind of ratchet back a little bit. Us and soybeans will have to go down a little bit, but I don't think it's going to bring us down 50 cents to a dollar. Maybe 20, 25 cents.
Okay.
That's kind of what it's going to affect us.
Speaking of Iran, Strait of Hormuz, Mac.
Yeah.
What's that doing for our pulse markets? And you can talk acreage as well.
Yeah, I mean, we'll address the ongoing situation in the Middle East right now. There's peace talks in place. We're starting to maybe see some traction there. At this point, for our markets, it really hasn't responded yet. The shipments that haven't been able to get to that part of the world still aren't able to get to that part of the world. Buyers are holding firm. They still want to take the product. We are getting into a little bit of that new crop, old crop situation coming up here as, harvest creeps closer every day. But that being said, I don't anticipate any big fireworks in any of the pulse markets right now. It feels like we've definitely found a solid floor for everything. Upside opportunity, we will see what develops here. There's definitely India's something to keep an eye on. They're talking less monsoon, a little more drought there this year. They're behind on seeding, it looks like. India is one of those markets we'll know when they're in and buying when they're in and buying. It's hard to get a lot of accurate information out of that part of the world. A lot of producers, pretty geographically spread out, and just kind of hard to compile all that data into something that's easy for the industry to understand.
Absolutely. So as far as StatsCan or USDA reports go yesterday, any surprises or highlights on acreage or ending stocks for you?
Nothing really surprising. Kind of on that same theme of weather concerns, we do need to keep an eye on Canada, like Shane was talking. Maybe not ideal seeding conditions, either too dry or too wet. Mm-hmm. And I think we're seeing some of that into Montana and the Dakotas as well, which could give some support to the quality stuff we produce out of here. But overall, we're still see a fair amount of chickpeas out there, a fair amount of lentils out there. I actually just this morning was kind of running back through the stocks to use numbers and seeing what's been reprojected. U.S. lentil stocks for 25 closed out at 106.6%.
So they doubled from last year.
Projected for 26 is to be about 65% stocks to use, which is still very burdensome.
That'll keep a lid on that lentil market, won't it?
Yeah, it sure will. Yep. Chickpeas adjusted down a little bit. A 33 stocks to use to end out 25, projected 26.1%. I mean, it's still more than you want to see.
Of yield, right?
That's assumptions of yield and assumptions of
trend
what's going to get.
Sure.
Yep. Exported.
Yeah. Acreage was down for most pulses, both U.S. and Canada.
Acres were down across the board. Yep.
Okay. Yep. Okay.
Flipping over to USDA.
Yeah.
Yeah, your turn.
Sure.
What did wheat,
we'll talk
corn?
grains here.
Yeah.
For corn and soybeans yesterday, not a whole lot of changes. Actually, zero change for corn. Acreage from the March intentions report, a slight increase for soybean planted acreage. On the stocks report, largest number ever for June 1 corn stocks, 5.2, almost 5.3 billion bushels of corn. And in the United States, corn is king. It dominates acreage. Got the most stocks of corn than any other grain. So that is the most bearish thing for wheat, I think, right now.
Right.
Is those corn stocks number. What else could I mention for corn and soybeans? I believe that pretty much caps it there.
Yeah.
Wheat's a little bit more of an interesting story. Start with quarterly stocks. It was in line with expectations. June 1st stocks, 920 million bushels. That's an 8% increase from last year. So still comfortable stocks wheat in the United States. And in Washington, Oregon, and Idaho alone, wheat stocks this year, 92.6 million bushels versus 85.4 million bushels last year. Again, another 8% increase year over year. Acreage. This is where things get more interesting. And we knew from March that acreage was an all-time low for winter wheat. For spring wheat, acres were not earth-shattering. They weren't going to be big. I got the details here. Winter wheat acreage down 5% from last year and a 3% cut from that March estimate. So, where did they make those cuts for winter wheat acreage in the last 3 months? It's been planted for 8 months, 9 months. The big loser was Oklahoma. 300,000 acres of winter wheat were cut or taken out of the planted acreage. North Dakota, 290,000 acres. That is the only state in this list I'm going to list that was a cut in spring wheat acres. The rest are winter wheat, which, again, it's been in the ground for 8 or 9 months. Why are they cutting it? Who knows? Another 200,000 acres in Texas, 100,000 acres in Kansas. That makes up about 85% of the 1 million acre cut they made to all wheat acreage. Now, doubling down, something that you got to kind of read between the lines and figure out, and I didn't realize this until about page 39 of the report yesterday. Winter wheat area harvested for grain is forecast at 21.2 million acres. That's down 4% from the previous forecast in March and down 17% from last year. If realized, this would be a record low harvested area. 10 million acres of all wheat is not going to be harvested this year. 10 million acres. Last year, we abandoned 6 million acres. So this is called abandonment. It's planted acres minus harvested acres. That's what's abandoned. Last year it was 6 million acres. This year it's 10 million acres.
Do you think that was due to the recent weather they've received, or was this already baked in?
Yeah. Okay. I was talking to somebody here, an exporter on the phone this morning, and they do business in Kansas, and they've got a system through the center of Kansas where the drought was really heavy. He said that insurance adjusters would come out. They looked at a crop. They decided if it was less than 15 bushel the acre, leave it alone.
Don't even mess with it.
I don't have the breakdown on where these abandoned acres are just yet. But a 4 million acre increase in abandoned acres year over year is insane. Washington, Oregon, and Idaho alone have 4 million acres of all wheat. So if you just cut that out of the entire U.S. acreage, that's to me is crazy. But I had to ask AI. I asked Google AI, what are the top 10 years for wheat abandonment in the United States? Number one is 1917. 33.5% of the acres were abandoned. That was 13.4 million acres at the time. This year, 2026, if realized, will be the third most abandoned or third highest percentage of abandoned acres at 32%.
Wow.
The Dust Bowl in 1933, I've got it here. That ranks at number 4 at 31.3% of acres abandoned. Again, 13.5 million acres abandoned that year. So we're going to harvest fewer, abandon more acres percentage-wise than during the Great Depression. It was a bit shocking to me. We're seeing some follow-through buying in the wheat futures today. We were up 8 or 9 at the close. Yesterday, this morning when I got in, we were up 18. So there's obviously some people buying into that. Makes me a little more long-term bullish on wheat. But in the short term, you got to step back and look at the world again and how much wheat we have in the world. Our export prices, not super competitive. We're still selling wheat to the countries in the Southeast Pacific that have more of an inelastic demand for our stuff. So,
we fielded a lot of questions, and I'm sure you did at the Fairfield Field Days. What do you think's the outlook for the hard red DNS, hard red winter, with this report and loss? I mean, most of that loss is going to be in the Midwest,
right?
Not out here. Do you think that bodes well for a strengthening market?
By class, I'm gonna again point to stocks to use ratios. Hard red winter wheat is still that highest one. It's I'm spitballing here. It's probably around 40% still, even given the cut in acres, low yield. We had such a high carryover from last year, over 50%. We're going to cut it down quite a bit this year, but it's still over 40%. White wheat, under 30%. Again, I'm spitballing, but that's where it should be. Soft red winter wheat, more like the soft white. It's 30 or less. So less burdensome stocks there. Those are my main highlights for For wheat, StatsCan did say that they planted less wheat too. They're down almost 6% total wheat. That's Durham and spring wheat, and there's not much for winter wheat up there, of course.
Which could get worse with the same weather
Right.
they fielded.
Yeah. Yeah, that stuff probably got put in late too. It's behind normal development, so on and so forth. Okay, I believe that's all we've got for today. Wishing everybody a happy 250th birthday for America. Celebrate and be safe this weekend. We'll be talking to you guys again after our July WASDE report coming up here in another couple weeks. Thank you.
Thanks,
Thank you,
everybody.
guys.